9 a.m. here in Taipei. It is a new day and, of course, a historic weekend here with the DPP securing a third term, a record one here, and President Lai Ching-te set to be the next president of Taiwan. That extends, of course, their hold on power, but they also did lose that parliamentary majority, also only getting 40% of the vote. What does that mean for the mandate for the DPP? And how big of a challenge will this be with relations with China? Welcome to Bloomberg Markets China Open. I'm Yvonne Man in Taipei with David Ingles in Hong Kong.
Yep, let's get straight to the market open in Taipei there, Yvonne, with really reaction generally on the positive side. When you look at the size of the move so far, really more perhaps a removal of near-term uncertainty than a re-rating in the market. So stocks in the way up. We're getting some strength coming through a little bit in the Taiwan dollar, although that being said, of course, you compare that to what we're seeing against the rest of the Asian FX complex, and the Taiwan dollar is doing slightly better than its peers right now. We're getting also slight pullback in implied volatility across these markets right now. So in many, many ways, fairly constructive first few minutes in trade there, as you can see. Let's flip the boards and have a look at just your big four movers, if you will, the big four stocks in that specific index. So we're looking at a 0.6% overall, just to compare it in price itself. Give or take 40, I mean, this is really consistent, in fact, with what took place in terms of voting on the ground. 40% up, 45% down, 45% unchanged, 10% down. So this is really, in many ways, non-resounding as far as the breakdown in this equity market is concerned here. That takes us straight into, just in terms of backdrop here, takes us straight into the open today across these markets on top of Taiwan. It's going to be very busy as far as the next 60 minutes are concerned when it comes to China. We have that one-year policy rate, and we are expecting a cut of 10 basis points there. That should be out in about 18 minutes from now. Asia is better by 0.25%. A lot of that is down to what's happening again on the Nikkei 225. 0.25%, half of 1% to the upside right now. So that puts us, within about 8% of all-time highs. December 29, 1989 was the last time we saw these levels really on the Nikkei 225. Bonds and FX, it's Martin Luther King Day, of course, so you don't have cash treasuries today. You are getting a mixed picture as far as this bond futures are concerned. You had a big pop in treasuries on Friday, big drop in yields. That's a look really across the FX markets. We'll take you about the fix later on. And really the anchoring that's taking place out of the PBOC. We're back above the 50-day moving average on dollar China very quickly. Commodity markets and Bitcoin, which is pulling back still, 43,000 in that. Iron ore is seeing a little bit of upside, and I'm being extremely generous with that. We're trading at about 6-7 week lows on iron ore prices. But Yvonne, back to our top story, of course, there.
Yeah, as you mentioned, that what you're seeing in these Taiwanese markets, perhaps it's the lifting of uncertainty. That's why we're seeing a bit of relief. But does it really change the trajectory of this market, given the fact that this was no surprise in this election outcome? This is still, in some ways, the current status quo. We did hear, of course, from the president-elect, the Taiwanese, their Lai Ching-te, after his victory speech here, talking about, look, they're still reiterating seeking better cooperation with China. Of course, we also heard from the China response as well.
We are telling the international community that between democracy and authoritarianism, we will stand on the side of democracy.
The forces of Taiwan independence seriously threaten the benefit of the Taiwan people, severely damage the fundamental interest of Chinese nation, heavily undermine the peace and stability of Taiwan Strait. This is a road that will lead to a disaster and a dead end.
Let's get more now with our Taipei Bureau Chief Samson Ellis with the latest. And Samson, you know, Lai Ching-te is certainly a president-elect that Beijing does not like. What comes next?
Well, that absolutely is the big question this morning. as we pass through the results of this election. So obviously, Lai Ching-te and his DPP returned to power for another 4 years at least, but it was with a relatively small percentage of the vote. He did not get a majority of the vote. In a three-way race, he only managed to get 40%. So that means 60% of voters did not vote for him. So I think we are going to see a very different DPP government this time round. It's going to be much more constrained. They've lost their majority in the legislature, which means they're not going to be able to push through legislation without working with the other parties. And so based on his comments after the election, we're going to see a much more collaborative DPP. At least they're going to try, and maybe also pulling figures from other parties into the cabinet as well, even. So domestically, at least, it's looking like we're going to see a much more constrained and, ideally collaborative DPP over the coming years. But then the big question hanging over all of this, of course, is how China is going to react, right? That really is the big question. And so far, obviously, they've expressed their dissatisfaction, but in rather a muted manner. If you go back and compare how they responded 4 years ago to, a much more moderate DP president in Tsai Ing-wen, how they responded to her re-election, outright calling her evil and a string of personal insults directed in her direction after she'd won. So what we're seeing this time is absolutely a much more restrained, muted response from Beijing, which is also, in many ways likely linked to their current desire to improve relations with the United States.
Speaking of Sam, David here, by the way, we also understand, and give us more details on this, that, the outgoing president, of course, Tsai Ing-wen, is set to meet some U.S. officials this hour. Just correct me if I'm wrong there.
No, exactly. That is the case. So they've landed already. They're here. And again, China obviously reacts badly to visits from either officials or former high-ranking officials. There's some former State Department officials in this delegation. They don't like it. They make it very, very clear that they don't feel any country that has formal relations with China should not be interacting with Taiwan in a way that implies Taiwan is a nation itself. But again, these visits are absolutely routine. They happen after every single election in Taiwan. Obviously the US is Taiwan's main backer in many ways. It supplies almost a majority of Taiwan's military assets. And on the international stage does speak up on behalf of Taiwan, wanting to give Taiwan a bigger voice internationally, and is the leading figure in pushing back against Chinese efforts to isolate Taiwan.
Samson Ellis, our Taipei Bureau Chief, there with the latest. Of course, let's bring in our next guest, Xiaowu Shirley Lin. She is the chair of the Center for Asia-Pacific Resilience and Innovation and a research professor at the University of Virginia. And she joins me here in Taipei. Professor, thank you so much for joining us. Your take on this election result?
Well, I think the presidential choice was not a surprise, but I think my big takeaway is there's three things. One is nobody really liked any of the presidential candidates that much, so they turned now a divided government. They voted for a president that is really just getting his base votes, 40%, for Lai Ching-te and Xiaobi Kim, who used to be the U.S. representative of Taiwan. And I think the second is the parliament will be divided. Mm-hmm. The KMT and the DPP are only one seat apart, 52 and 51 seats, which is a little surprising. And we have a third party, the former mayor of Taipei, where I'm from, Ko Wen-je. His new party didn't win any district, but actually now has 8 seats in the parliament. What that means is legislating and pushing forward on foreign policy decisions will take a lot longer, if at all.
Yeah. Lai only getting 40% of the vote, though. I mean, it just goes to show, had the KMT and TPP kept this coalition intact, we might be talking about a very different result here now.
I'm not sure, actually, Yvonne. I think a lot of people are talking about what if, but I think, first of all, their merging was always very problematic, knowing the personalities. But secondly, actually, the White Party, the third party, Ko-Wen-je, actually took a lot more green votes than blue votes. This is very much certain if you look at the surveys. So the question about what if they merge, would people vote for a merged party? It's very hard to say because 30% of the voters are under 40, and they're highly, I talked to lots just by asking. I could say that many of them are still trying to divide their 3 ballots to make sure the government has check and balance.
What can we expect out of the China response in the coming weeks or months? I mean, right now we're seeing things are quite timid. They didn't even mention lie in that statement from the Taiwan Affairs Office. Can we expect things to stay the way they are, or are things going to look more rocky moving forward?
Short term, I'm optimistic. Long term, I'm still very worried. But short term, I think for the market, for stability in the Taiwan Strait, it's actually not that bad. If you see what's happened in the last 8 years, and this is the first time a Taiwan government, actually the same party is ruling for 12 years, basically. But the reason is because if you look at all 3 candidates, the policy platform on China has moved towards the center. KMT tried to stay away from talking about China. The DPP tried to stay away from talking about its closeness to the U.S., while the TPP says, hey, we're good for everything. So if you see that, a majoritarian system has brought actually the politics more center, more moderate, and less extreme. And so I think that Beijing is probably going to wait for the U.S. presidential election to make any further strategic move. I think on a tactical level, they've been doing very much the same, but toned it down a bit. And I think this time it's probably a little bit more effective. If you look at China-friendly legislators, they're probably more than expected. In that ways, it's a consolation prize. But long-term, the problem is, how do you win the hearts and minds of the Taiwanese people? Because that is the best way to move forward for Beijing.
That's the key question for the KMT, right? The main opposition party that has lost 3 terms in a row. I'm just wondering, there's so much soul-searching going on. What do you think went wrong with the KMT in particular? I mean, can China and the KMT continue on with this sort of strategy and giving out these sort of economic sticks right now? That doesn't seem to be working. Or do they need a new strategy?
Well, I think, first of all, both the DPP and KMT are soul-searching. Both of them lost so many votes this time to the TPP. It's quite incredible if you think about it. Everybody reverted just to their base votes, meaning votes that they can get without doing anything. So the KMT lost did not ever have really young people's votes last 2 times, and they continue to be very much older and older and very conservative, even on other domestic policy issues. And the DPP also basically just had their base votes. If you looked at it, it got as many votes as Chen Shui-bian basically in 2000. So what went wrong for the DPP? I think both parties, one, KMT is the party of the past. DPP is the party of the present, and young people said, no, we want a party of the future. We want a different way. We want our leaders to hedge between China and the U.S. I think this is quite important. I think everyone's going to have to look out for younger people deciding the future of this place, and that will give Beijing and Washington quite a bit of headache. But as we say, all of this, Yvonne, right now, Stephen Halley and Jim Steinberg have already arrived. Yeah. So the U.S. continues the strategy of reassuring Taipei and reassuring Beijing at the same time.
I'm guessing why that his term will also be shaped by a change in what we could see in elections in the U.S. as well at the end of the year, right? He might be dealing with a very different ally in the U.S. if, in fact, we see a Trump win. How do you think Lai is going to manage that?
I think Lai has tried to reassure everybody in Taiwan and everybody in the world he will stay on the Taiwan path in terms of foreign policy. But more importantly, as you had just said, what did the 2 parties do wrong? What could they do better? For 2028, the race is already on. And for the 2026 mayor election. And the real issue in Taiwan, like all other high-income countries, basically it's housing, it's energy policy, it's inequality, it's health care. How do we take care of old people while fertility rate is so low? And all of these things, Lai will have to work with the KMT in the parliament to get these things done. Otherwise, he cannot have a position to negotiate with the U.S. or with China on anything. And this is the problem for all leaders in this place.
There's some commentary out there that if, and I guess this is the way that KMT campaigned it, that if we see another DPP term, that we are in a closer conflict with China. Do you think that's a fair assumption?
I don't really think so. For example, this race, I think for all of last year, Lai had a lead. It was more comfortable, it got smaller, but basically he was it. So I think Beijing is fully prepared and has been prepared for 30 years, frankly. For the last 30 years, DPP has been there, and it's not going away. And so I think that the question of continued sort of tension in the strait is to be expected for everybody. On the other hand, sort of to escalate that to the next level, Beijing will have to decide if that's strategically the best way forward.
Professor, it's great to have you here in Taipei with us. That was Shirley Lin, chair of the Center for Asia-Pacific Resilience and Innovation and research professor at the University of Virginia. Dave.
Yep, and of course, a lot more coming up on the Taiwan story in the next few hours of Bloomberg Markets here. So we dig deeper into the likely market impact of the election result and really find out what's in investors' minds right now. Paul Yeo joins us a little bit later on in the show. Right, just some breaking news to tell you about the two-year yield in Japan. We've been down successive days, and just to greet us almost on point as we start a new week, the two-year yield is now back below zero for the first time since July. And interestingly enough, about a week to the BOJ's first meeting of the year this time, around this time next week. Okay, that's the reference rate for the PBOC, and the midpoint for the currency is out right now, 710.84. The estimate 716.59 against the US dollar, and we're just moving up a few minutes away, going into the one-year policy rate, which should come out in the next few minutes or so. On that note, plenty more ahead. This is Bloomberg. Right, just over 10 minutes away from the opening bell here. A couple of things to tell you about. So futures are, well, last we checked here, A50 futures here in Hong Kong, slightly on the weaker side. Some anchoring coming through again out of the PBOC. Weakness persists in iron ore, for example. You know, we're back to the lowest level there in about 5 or 6 weeks. And this great China bond rally is something that we're continuing to follow with your 10-year yield at 251 that goes into really easing expectations. And you know, in less than a minute, we'll be getting the latest iteration of that, where economists are expecting a 10 basis point cut in the one-year policy rate. As far as this bond rally is concerned here, we've been pretty much up every single week over the last 3 months or so. You can even extend it all the way back to almost 10 months back here, the great China bond rally. Right, some analysts actually to tell you about. There's a very long list. Jefferies is out actually with their new calls in the China energy space. Investec was, I think this was on Friday, raising 10 cent to buy at 340 a pop. Chow Tai Fook cut to reduce at CLSA. Very quickly, the agenda for today looks like this. Maybe some data in the form of FDI coming through. And we're just looking now at any moment now we should be getting the one-year policy rate out of the PBOC. Just some context there. Last year was a reduction of about 25 basis points. It was split over 2 moves. We've come from 275. We're currently at 250. If we do get that reduction of 10 basis points today, takes us now to 2.4% on your one-year lending facility, and it's now out. We're now, oh, okay, no change. Wow. Wow, no change. 2.5%, 995 billion at the same rate at 2.5%. We're also getting the PBOC coming in and selling roughly 90 billion yuan in 7-day reverse repos. That should be also at the same rate on the 1-week repo, 1.8%. We'll get you more context, but certainly unexpected here, keeping the one-year policy rate unchanged at 2.5%, despite expectations of a reduction, some strength now coming through a little bit in the Chinese currency. We'll see whether markets will take this one in stride, or are we going to see a further downdraft in these equity markets? Right now, okay, guys, can we get the one-year, can we get the China futures up, please, if we can? There's a massive plunge right now that's taking place in your A50 futures. We're now down 1%, down 100 points. Markets are not liking this decision so far. Plenty more ahead. This is Bloomberg. Okay, welcome back. And yeah, the PBOC giving us something to take our minds off Taiwan for the moment. And no change, unexpected, really. 2.5% coming in with 1-year MLF. Yeah, and markets are not taking this one in stride right now. You're looking at futures pointing down, and there you go. That's the visual iteration for you. 0.8 at 1%. Rebecca Chung-Wilkins is with us here on set, our Asian government and economy correspondent. Yeah. What gives?
This is a nasty surprise for markets. The expectation really was that we were going to see this cut 10 basis points. Even that, is worth saying, would be relatively small.
Right.
And more broadly, there is this expectation that ahead of the MPC in March, that's when we're going to get the GDP target, if indeed we do get one this year. They would sort of front load some of this monetary and fiscal support sort of to have a sort of more friendly context to that MPC meeting. And of course, we haven't seen that at all. It is a surprise, and it's also quite a nasty surprise when you think about the credit data that we had for December. Although, of course, the government funding number was quite positive there, but this sort of difficulties in corporate financing, this pullback in credit there, that's really sort of underscores this problem with shadow banking, or also with bond financing. So this whole issue of debt financing, which would have been eased had we had some kind of cut, still very much up in the works for the first quarter.
Rebecca, I mean, why do you think there's not that much urgency from policymakers? Obviously, the markets want it, but is there something wrong with the whole transmission effect of these cuts or cuts here for the economy that maybe that's leading PBOC to really kind of not be too aggressive when it comes to these rate cutting cycles?
Well, I think one thing that we can consider is that this sort of type of support isn't typically expected to revive broad-based demand. This would really have been about sort of providing some kind of support for debt financing, for example. And what we might see the central bank turning to is sort of other forms of what are the effectively sort of targeted QE. We've already seen them turning to sort of providing, for example, more supplemental policy support, directing more support, perhaps, for example, to policy banks to then transmit that to support housing projects and housing developments and so on. So what we might see is perhaps less of these broad-based demands and more of this much more targeted policy making. But the central bank will have to much more deeply into its policy toolbox to really try and turn things around. I think there is a real focus now on what happens for the first quarter.
Rebecca, thank you so much. The open, just over 3 minutes away. We're poised for a lower open. Happy Monday. This is Bloomberg.
You're watching Bloomberg Markets, China Open. Happy Monday. Well, happy is, I don't know. We'll see if people will be happy here. Take a look at what we're seeing when it comes to futures in China. Seeing some disappointment when it comes to that MLF decision from the PBOC unchanged, when I think everyone was expecting at least some sort of 10 basis point cut here. So potentially that could really dictate much of the mood here this morning, Dave.
Yeah, maybe let me just look at the potential silver lining there and maybe add to the speculation in the markets right now. Maybe they're saving something for the future. Maybe something big's coming this week. Maybe not. Obviously, it's a very data-heavy week in China. You have the GDP numbers, you have activity numbers, you have effectively the jump-off point for any growth target for 2024 this week. And we'll really see what how markets do within these sectors will really tell us what the market is thinking. We're down 1% at the open on the Hang Seng Tech Index. Shanghai Comp is down about 0.3%. So again, in case you missed it and just joining us right now, no change on the one-year policy rate out of the PBOC. The one-year yield is now down to about 2.07. The 10-year yield is down to about 2.5%. So we're up 11 weeks in the last 12 on China government bonds. Let's have a look at sector groups if we can, please, and flip the boards, please. So you have tech. We talked about that. We're getting some pain coming through there. Developers are catching some version of a bid. I'm being extremely generous again with that. Just about every single sector group is down. We're weaker slightly on the currency. We breached the 200-day moving average on dollar China, I think about a week and a half ago. Within the span of about 7 days from that point, we've also breached the 50-day moving average on dollar offshore is what I'm talking about here. Country Garden Services, this line is crossing my terminal, hitting a record low right now, 586. Tencent getting an upgrade at Investec. This came out on Friday at 340 a pop right now is their price target from that. And of course, we're also looking at Logan Group following this restructuring deal with the credit group. That news is coming out right now. We're up 15% in the early goings on the back of that news. And some other property names to tell you about, flip the boards. We actually had a notice come out. I'm just trying to find my notes here for that. It was on Friday. Out of, I think it was a cross-ministry notice, and bear with me while I turn the pages here on my notes here, and effectively encouraging the local governments and the banks here to provide reasonable financing for some developers, not to blindly extend credit to developers, but essentially tap on existing lines of credit. We're looking at a mixed picture across, and fairly big moves still, unexpectedly so here across a lot of these big property developers in China. Right, so that's a China story. Again, it's a big week in data. There's also the BOJ next week. We have some inflation. I think inflation numbers coming through this week. A few minutes back, about 20 minutes back, the 2-year yield in Japan actually breached, fell back below zero. Yeah, we're back below zero there on the 2-year yield in Japan. Massive move in treasuries on Friday. You had a weak PPI numbers. It looks like, based on current pricing, the Fed, well, the markets are looking at still March for the first rate cuts out of the Fed. To talk all things macro and investment strategy, joining us out of Tokyo, William Warner, founder, CIO, R-Squared Global. Will, good morning. Happy New Year, sir. First time we're talking this year. Why don't you get us started by telling us how did your fund do last year? Then we'll take it from there. What was performance like?
Last year was pretty great. We were basically in line with our target. We reached about gross return close to 33%, so closer to 32.6%. Mostly because we were pretty cautious. I think last year, the beginning of the year was very uncertain for a lot of people. A lot of people, especially during the SVB meltdown, recession was priced close to 70% in the U.S. And there was a lot of uncertainty in the market, so there was a lot of opportunities throughout the market. And then again, we moved to October when yield in the 10-year Treasury hit close to 5%. At that point too, there's a lot of fear that we could tip into recession if rates stay too high. And then after that, with the month in December, when market became very positive, when they see so-called the end or the pivot of the Fed. As we see inflation getting tamed, people start to be positive again. So again, the scary theme about this year, I feel that is market has been overly positive in 2023. People seem to forget what happened in March, basically after SVB. Everything seems to be rosy and perfect.
Okay, well, so what are your what are your strategies right now? You mentioned you were cautious this time last year, turned positive, and based on, I guess, your comments just there, you're not as positive as most in the market feel right now. What are you guys overweight? What are you guys doing right now?
Well, I think the market is pricing in pretty fairly for the rate cut, despite what a lot of people think as being aggressive. Why I say that is because I feel like when we see a crack in the economy, we've had decrease about 40% in the housing activity for the past 18 months in the U.S. We've seen China PPI negative for the past 3 prints. Again, we just had China keeping the rates unchanged. That is another pretty negative news for the market, I guess. And for Europe, we are basically in a point where you're not really sure what's the print this year for the growth in the market. A lot of people think Europe is, trailing in between slightly positive or maybe slightly negative growth for this year. We are already in a technical recession. So I feel that market has been positive. We have not really seen any sort of pricing in the market, actually. Even if you look at durations, if you look at the long-term positioning in equities, etc., people seem to be quite positive about the market. So I feel like the risk tips to the downside. The way we position ourselves is we feel that bonds are still good investments. I think fixed income yield is still attractive at this level. Despite the rate cuts being priced, again, our absolute level now is 5.5% in the U.S. Even with 6 to 7 cuts, we're still, hovering 3.75 to 4%. So I think, assuming if something goes wrong or there's a crack in the market, let's say if we have, credit market issue, especially in the commercial real estate, you'll never know when that could hit this year. That would mean that, I think in the long view, fixed income is still pretty good.
How much duration do I want?
I think, 10-year is a bit risky because there's still a lot of bond issuances in the coming few months. But, if you look at the mid to, in the midterm, for example, like the 3 to 5 years, I think it's still a good investment if you would like to hedge your risk for the next 1 year.
Well, I need to ask you about Japan since you're in Tokyo. I mean, the market's just gone insane. I mean, things have just gone vertical, really. Pick your index in Japan. What's going on? What's the mood? And do you think we could see the Nikkei top a new all-time high this year? We're within 10%, by the way, in case you didn't know, but I'm sure you do. The Nikkei on the 1989 top.
Yeah. Yeah, I mean, the thing about Japan is, being here, you could really feel that most of the positivity are pretty much driven because there's a weak yen locally. You could really see it transcend into the property market. There's a lot of bids in the property market in Japan just because the dollar yen is so strong. I think if we see Fed cutting rates quicker than expected, for example, and US dollar weakens, if dollar yen does reverse, you could easily see a reversal in the activity that we've seen so far. More so, I think, in the print of inflation in Japan, as we see, positive inflation growth in Japan, it's actually a positive thing for Japan because we have not seen that for a while. Any sort of reversal in yen trend, I think, could trim a lot of that back.
Will, final question. Need to ask you about China. We're still in a bear market. It's still a thriving market, though, I have to say, for traders. Do you see China having any place in strategy, in your strategy this year? What opportunities, if any, do you see in this greater Chinese market?
We continuously speak to a lot of investors globally, and I would say it's not really a great feedback that we continuously still get about China. I think most people are still cautious about China. We are actually still cautious about China too. China has been struggling a lot with recovery in the housing market, consumer confidence, getting their own local demands back up. And, the government, I think, is not proactive enough in trying to prop the economy. So we are continuously cautious about China. I think we've seen, CPI and PPI in the negative territory for China, and I think we will still continue to do so, to see so. Exports has still declined. We still see export being less than last year. We see a down 4.6% in exports. I think with the global demands getting weaker in general, in Europe, in the US, I think China could be impacted even more severely, actually.
Well, great to talk to you, sir. Have a great 2024. William Warner, their founder and CIO of R Squared Global. Yvonne.
Yeah, we got some breaking news, Dave, when it comes to, of course, this looming government shutdown in the U.S. It looks like we've seen some moves, at least from the House and Senate, releasing this stopgap spending bill to March 8th now. So it means that, at least for now, U.S. lawmakers have averted a partial government shutdown that was supposed to happen on January 20th. So it reduces the chances, of course, of a shutdown. But again, there's still a lot that has to go on here. The Senate will have to begin these procedural votes on the bill on Tuesday, which will require the cooperation among 100 senators to pass it before the deadline and before it lands on President Biden's desk before that deadline. So certainly there's still something that could happen the next few days or so, but efforts are being made. There certainly is also a lot of questions about the speaker, Mike Johnson, after he did defy some of those hardliners out there by sticking to that spending cap deal with Schumer as well. U.S. futures slightly to the negative this morning. This is Bloomberg.
As long as there's equality and compatibility between the two sides of the straits, Taiwan is willing to engage with China for exchanges and cooperation. We will vigorously assist the semiconductor industry in material and equipment R&D, IC design to manufacturing, packaging to testing, to form a more complete industrial chain.
That was the Taiwan President-elect Lai Ching-te in his victory speech on Saturday, talking about still wanting to cooperate with China and also vigorously supporting the chip industry. And this is how the chips are doing here this morning. They're liking this DPP win. Although it's a DPP win, it's still one what is weaker just given the fact that they lost a majority in parliament. So status quo remains in some ways, and maybe that's why we are seeing a bit of a lift, that risk sentiment and, of course, that uncertainty being lifted here across these markets. And you are seeing the likes of Taiwan Semi up 0.5%. And the benchmark itself, TAIEX, up about 1/3 really extending the gains after what has been quite a run for this market last year as well. Joining us now and talk a little more about the markets, of course, and not just Taiwan, but also looking at some of these consumer stocks in China. Let's bring in our Taiwan markets reporter, Betty Ho, and our Asia equities reporter, Charlotte Yang. Betty, I'll start with you. Walk us through the market reaction so far we're seeing in Taiwan.
Right, Yvonne. So the market reaction right now is pretty much in line with what analysts have been telling us. So after the election results came out, uncertainties around, Taiwanese equities and the Taiwan dollar has been erased. And right now at the open, we're seeing TAIEX up around 0.5% at the open. Taiwan dollar is little changed. So basically, like you said, because the election result is sort of some kind of a status quo kind of outcome, the market is doing pretty stably. For the next thing, I think the market will be looking at the other fundamentals like the tech recovery and expectations for further Fed cuts.
Right. I mean, the market, leading up to this election was really focusing more on AI and this chip rebound. I'm just wondering, what should investors really pay attention to next?
Right. So exactly like what you said. So the outlook for basically the AI and the recovery of the tech sector. What Fed's going to do next is definitely the main focus for the Taiwan dollar and the Taiwan Stock Exchange. But also, like you mentioned, because the DPP, even though they won the presidential election, but they actually lost the majority of seats in the legislature. So investors are also telling us that they are also watching out for any further disruptions, perhaps, that could happen in the legislature, and whether that would lead to, a more rockier road ahead for the new DPP president, Lai Ching-te, in his policies, especially in those ones that are more sensitive, like those that are associated with defense and national security.
Yeah, Charlotte, let me bring you in. And by the way, fantastic story here on, I think inflation came out on Friday, and hence we were expecting a rate cut today. We didn't get that rate cut. Before we talk about your story, just take us through market reaction so far. It's been negative.
Yeah, I think we can see that investors today are quite disappointed because it was widely expected that the PBOC will cut one-year MLF rate by 10 basis points, but they did not. So I think the message what traders got, again, reminded is that we can see that policymakers in Beijing, they're prefer to taking a more restrained, targeted, measured approach to prop the economy rather than, so investors have been adjusting the expectations lower a bit on that. But, looking at the smart bond market, which we started off 2024 in another low start, there are two things people are expecting to support. One is the government measures, another one is earnings. But with earnings, as we discussed further, which about the price wars, I think people are, a lot of investors are keeping their expectations low for the last quarter as well as this quarter.
Yeah, what else do we know on that earnings story? Because you have no inflation. That probably doesn't mean margins are thriving. That doesn't mean, what are you seeing as far as projections for the consumer sector in particular, too?
Yeah, so a lot of the bottom-up stories we're seeing across different sectors, whether it's electric vehicles or the fast food supply chains or sportswear, is that you can see, companies are engaging into this fierce pricing competition and to win over cautious Chinese consumers who have been more, rational in their purchases since the pandemic because they're worried about job cuts and also because they're worried about their income. So and at that conference, and with the CPI data we got Friday, which is the prices have been falling for the third straight month, and that's really bad for the businesses, especially that cannot boost volumes with lower prices. So the deflationary environment is going to, I think, create more headwinds for earnings as well as sales.
Yeah, we just talked about that. Leaning, of course, also getting a cut underweight at JP Morgan. Team, thank you so much. Charlotte Yang there, and also Betty Ho joining us out of Taipei this morning. Right, plenty more ahead, including some other big moves we're tracking across these markets. Good morning. This is Bloomberg.
Well, economic, financial, and business leaders are gathering in Switzerland for this week's World Economic Forum. And the theme this year is rebuilding trust. Here's a look at the main issues set to dominate discussions there.
White alpine mountains, billionaires, and the global elite. It can only be Davos, the tiny ski resort in Switzerland, home to the annual meeting of the World Economic Forum. Here are three key topics high on the agenda. Number one, a dovish pivot. Despite all the talk of higher for longer, sticky inflation, and robust labor markets, investors are now pricing in aggressive rate cuts by key central banks this year. Following the cost of living crisis and the unprecedented cycle of global monetary tightening, reduced borrowing costs cannot come soon enough for debt-strapped companies and governments. And the next crucial question is whether policymakers can make the pivot to avoid a hard economic landing. 2. Rising geopolitical pressure. World leaders were already grappling with the Russian invasion of Ukraine, launched by Putin's forces nearly 2 years ago. The much-anticipated counteroffensive by Kyiv hasn't quite gone to plan, and foreign support and military aid is not flowing as freely. There's now also a second conflict on the global stage between Israel and Hamas. The humanitarian cost has been immense, and the war has the potential to spark wider tensions across the Middle East with ramifications for global trade. And 3, just 2 letters, AI. Investors are obsessed with its potential to disrupt chunks of the economy, and it drove some of the biggest stock market gains last year. Pressure is now mounting on tech companies to deliver on some of the earnings hope. And in the hallways of power, security, and ethical concerns remain. The EU struck a landmark agreement to regulate artificial intelligence, and it could set the tone for similar rules by governments across the globe. Of course, Davos draws a lot of criticism as being exclusive and out of touch with reality. But key politicians and industry titans continue to go in droves. And as long as they do, the buzz will remain, along with the potential for meaningful change.
Big week for us there, of course. Francine and a lot more, of course, of our team there on the ground in Davos for us, and, of course, unmissable conversations coming up throughout the course of the next few days or so, including some chats with the OpenAI CEO, you have the ECB president there, of course, and also the boss at Blackstone. Okay, that's the forward-looking element right now. Back to the here and now, though, markets are doing this. So a couple of things, right? Nikkei's continuing this rally still, 0.6% to the upside, give or take about 8% to go before we hit that all-time high back in December of 1989. Generally, stocks in Taiwan are taking results positively, although at these levels we're coming off highs of the day. We're coming up lows of the day as part of the HS Tech Index, which isn't really starting off the week on solid footing, and perhaps really that unexpected development out of the PBOC and one-year lending rate, policy rate kept unchanged at 2.5%. I guess it meant recalibrating our expectations for what this week probably holds. Okay, some movers to tell you about. Logan Group is up 6.7%. It's resuming trade. You have this deal, of course, with creditors. Tencent is coming off highs at a day, 288 right now. Raised to buy Investec. If I remember correctly, Investec was actually one of the holdouts. When you look at buy, sell, and holds, kept, I think, a hold for a very long time. Anyway, raised to buy now 340, and we're looking at some of these EV plays. This reports, well, BYD is an FT report and a Reuters report as it pertains to, of course, BYD and others in the coming weeks, perhaps opening investigations there into those specific companies. Right. Just ahead, we'll get reaction from Fred Newman of HSBC on this, I guess, the PBOC standing pat, what this week looks like as far as data is concerned. We're also talking Taiwan with Paul Yeo. So lots of good conversations just ahead. This is Bloomberg.